welcome to another edition of Ask Spurrell CPA. Today we're talking about bank reconciliations. I'm here with May.
Hi.
May, thanks for joining us again. So May, you enjoying the fact that we're not driving to work in darkness anymore?
No, yeah, I'm just happy that
We-
it's early, we get to work, and it's more like brain opening than anything.
Excellent, excellent. So the quote that I have today concerning bank reconciliations, Albert Einstein quote, and it says, "If you can't explain it simply, you don't understand it." The statistic that we have, 50% of all businesses go out of business in 5 years, and one of the big three reasons for that is they run out of cash. The story that we have is, business owners, they're trying to make key decisions, but they have significant errors in those cash balances. May, what are the questions that you think that these business owners need to be asking?
Well, what is the difference between registered balance and statement balance?
So when you have a bank reconciliation, it starts with the statement balance. And that statement balance up top should be the exact same balance that's on your bank statement at the same day. So if you're looking at the last day of February on your bank statement, the last day of February on the statement balance on the bank reconciliation, it should be the same number. And then in between it, you're going to have uncleared items. And then at the bottom, you're going to have the register balance. So these uncleared items are, checks that have written that haven't cleared the bank yet, deposits that have come in but aren't showing yet on the bank statement. And then we have that register balance, which is basically the balance after all the smoke clears. This is the balance that we're going to expect. And that register balance is the same balance that's showing on your balance sheet, on your general ledger. And it's the same, cash balance that's used to, ultimately that goes into the determination of your profit and loss statement too, because those entries are included on that.
And so what is the purpose of a bank reconciliation?
So the purpose is to really go through those uncleared transactions. So to first make sure that statement is going to match. So we have a starting point, the bank statement and our statement balance in the bank reconciliation, they both match side by side, but then we look at those uncleared transactions. So we see which transactions have cleared. You might have written a bunch of checks and some of them cleared, some of them not cleared. Which ones have not cleared? So the ones that are still outstanding, waiting to be clear, which deposits that have been booked, they appear reasonable, they're going to come in, and it really just tells you at the end of the day, this is what cash is available to the business. So rather than the statement balance, we could have a statement balance for $100,000, but we wrote a check yesterday for $50,000. Well, there's only $50,000 available. So it's really showing what is the actual available cash in the business.
And why is checking the statement balance first a good idea?
So really you want to check that statement balance first and lock it in against the statement balance on the bank reconciliation, because that makes sure we have a good starting point. Everything else, you can look at the uncleared transactions, but we could be out, right? So you really want to look at that statement balance first, and that's kind of what happens. The first step in a bank reconciliation is all the transactions are already booked in the accounting data file. Now we're just matching the accounting transactions that are booked in the accounting data file and seeing which ones have actually cleared the statement. So we get down to that statement balance, and then we can start drilling into those uncleared transactions. And are they legitimate uncleared items, or are they possible errors in the bookkeeping as well that have to be addressed before we take that register balance as the actual cash available?
So if a register balance doesn't match the ledger, is a future item marked clear?
Yeah, usually that if the statement balance is incorrect, now there's an error. There's probably human error in matching which items are clear, which items haven't cleared. But when the register balance at the bottom doesn't match the general ledger, so the register balance from your bank reconciliation doesn't match the ledger, normally what happens is there's a transaction posted for a future date after that bank reconciliation that has been marked cleared. So example, you're reconciling February and we booked a March 5th transaction as being cleared, and we're doing a February 28th reconciliation. So usually if ever, so if you see the statement balance not matching the statement from the bank, it's usually human error. You got to go transaction by transaction, see which ones are there, which ones aren't. But if you see the register balance on the bank reconciliation, and that's not matching the balance on the general ledger or the balance sheet, then usually there's a future transaction that's marked as cleared before the date of the actual transaction.
And what are the uncleared charges comprised of?
So the uncleared charges, normally they're checks. So normally this is checks that are have been written from the corporate account and they have not yet cleared. So those funds are spoken for. The funds have been dispersed. They're in the mail. The other bank has already cashed them. But even if they've cashed them immediately, it takes a couple days for it to post in your bank account. So they're primarily checks. I suppose you could have a payment, but it's going to be very quick. It's primarily the outstanding charges that haven't yet cleared the statement are primarily checks.
And why can't checks be outstanding for more than 6 months?
So they're technically stale dated. So technically, even if you've written a check and you wrote it for a legitimate reason and the other person hasn't cashed it, that check is now stale dated and the bank shouldn't cash it. It's no longer a legitimate document. So, when you're looking through a bank reconciliation, you see a check that's a year old or 2 years old or 3 years old. It's always wrong. It always needs to be corrected at that point because of course it was a mistake, it needs to get corrected, but even if it was a legitimate check for a legitimate purpose, it's no longer outstanding because that check is now stale dated. It's no longer a legitimate document.
Why shouldn't electronic payments show as unclear transactions?
Yeah, so you have this electronic payment that, electronic payments by their very nature, they're dispersed immediately. It's not like you process an electronic payment, a bill payment, or an e-transfer, and it takes a while for it to show up in your account. It either shows up in the account and it needs to be booked as a cleared item, or it never happened on that date. So either the date's wrong, you have it booked for February 25th and it actually happens March 5th, and we have to correct that date, or this transfer never happened, or it's a duplicate of another item that already happened. So when you're seeing outstanding charges and they're comprised of electronic fund transfers, so bill payments or email money transfers or some sort of direct debit or stuff that may appear plausible, it's not. As soon as you see in an EFT and it says this transaction is even 2, 3, 4 days old, and you're looking at a bank reconciliation and this is one of the uncleared items, it's probably not an uncleared item, it's probably a mistake.
And how long does it take for most outstanding deposits to clear?
Yeah, so that's the other thing too. Deposits, we talked about checks, they can be outstanding for 6 months. That can happen. It's rare. I mean, most people get a check and they cash it, and that's how it's going to go. But the life cycle is still longer, especially if you mail it, and by the time they get it, it sits on a desk, and then they put it in the bank, and by the time the bank actually posts a transaction. But in terms of a deposit, you get a deposit in. Again, if it's an electronic deposit, it should be immediate. By its very nature, it happened the same day. So you should never have an electronic deposit as outstanding because, by its very nature, it happened electronically. But let's talk about, some of the deposits that are outstanding a little longer. If you're using a credit card or debit card machine, that someone rings in their credit card information, they punch it into the machine, where it's, some sort of monthly recurring billing. Those deposits, they're going to hit the bank, same day, 1 day, 2 days, maybe 3 days later. Maybe there's a long weekend in there and it could go 4 or 5, but it's kind of the same things as the electronic funds going out. Those deposits, we shouldn't see uncleared deposits of any electronic means that are outstanding for more than a few days. Again, and if you see that uncleared transaction that's outstanding for more than a few days, we have a mistake. So, and it's one of the most common things is you get this bank reconciliation. People are, they're always saying, I got the bank reconciliation's done, statement balance matches, and they have these unclear transactions. They've had the same unclear transactions going for years in the file. Sometimes, not just months, sometimes the same unclear transaction has been there for a year or two, and that's affecting your cash balance on your balance sheet. And some were there is likely a mistake on the income statement that deals with it too. So again, if you have these outstanding deposits and they haven't cleared, you can't have a check. I guess you can have a check, it gets mailed to you, it sits on someone's desk for a week and then it gets deposited. I mean, that's another issue. Why aren't you making those deposits daily anyways? But you know, if we see outstanding deposits and they're more than a few days old, you should be skeptical that that register balance on your bank reconciliation and in turn, your balance on your cash balance on your balance sheet is probably wrong.
If you have a fictitious, uncleared deposit, is revenue normally overstated?
Yeah, normally that's what's going to go on. It could be booked to something else, but you know, in the majority of the cases, that's what's going to happen. Is you have a deposit. Often, what the transaction is someone booked an accounts receivable. So they booked an invoice when they earn that revenue, and they're waiting for payment on that. And then when the payment actually comes in, it's booked a second time as another revenue transaction. So it's likely in there twice. That exact deposit amount is usually part of another invoice. That normally that's what's happened in the accounting software.
If you have a fictitious uncleared check, are expenses normally overstated then?
Yeah, that can happen too. So either you got it booked twice and that's why it's showing up as an outstanding check that's never cleared, or a lot of times, you know, something can happen. Even you could mail them out a check and they never get it, so they mail you another invoice and you book the second invoice again as a bill in the accounting software, then you pay it again and the first check never cleared. It's probably in there twice again. So
are the rules the same for related party or shareholder amounts?
Yeah, they are. And usually when you're going through bank reconciliations, that's one of the common things that you're going to find in the uncleared transaction is some sort of shareholder amount, or some sort of related party amount. And people just, I don't know, they can just turn off their brain and just say, oh, the bank reconciliation, yeah, I understand my statement balance, and then I have this one uncleared check that makes sense. It's going to clear in 2 or 3 days, no problem. And then I got this amount due to the shareholder, the related party. It's been there for 6 months. Oh, but it's a shareholder related party. It doesn't matter. It does matter. Your cash balance is wrong. We got to fix that, right? So those shareholder amounts, it's the same thing. If it's a deposit, it should clear in a few days. It's a check. You know, it shouldn't take too long either, especially if it's a related party or a shareholder. You know exactly if it cleared or not. Did you hit your personal account? Did it hit the account of the other related party that you should have access to? This is something that can be resolved. It shouldn't be put off.
How often do clients have a fictitious uncleared items, and what should they do about it?
I would like to say it's not often. That's what I would like to say. But in all likelihood, when we get bookkeeping files that come in, I would say more than 50% of the time, they have unclear deposits or unclear charges that don't make any sense. They're old. They've been there for months, if not years, and you know they have to be addressed, right? And if you don't know how to address it, you need to hire someone who does know how to address it. And I just say, if someone gives you a long and convoluted answer of why we have these uncleared transactions, it's, you know, if you can't explain it simply, you don't understand it. Lots of times it's a mistake. It's usually recorded twice, or it's an expense or revenue that never was actually earned, and it's sitting there affecting your cash balance on your balance sheet, and it's probably affecting your income statement as well. So that's what we have for today on bank reconciliations. Thanks so much for joining us. As always, hit the like and subscribe button so we can keep bringing you tips on how to beat the odds at business. And if you have any questions, leave them in the comments below. We'll try to address them in future videos. Thanks very much.